Maybe it's a little bit presumptuous of us to do Blue Bayou now before we've done manufacturing accounts, but this is not really true manufacturing account. And what I like about the question is that it's of the very few questions that really test your ability to apply the weighted average method. So let's have a look at this question. Probably you will not be required to do the finished goods part, but you can definitely be required up till now to do the raw material part. Blue Bayou is an assembly plant for cleaning crawlers, a device used to clean swimming pools. The main components are one hammerhead motor and one customized plastic pipe. So each and every finished good of a cleaning crawler has one motor and one pipe. The company makes use of the periodic inventory system and determines the value of stock by using the weighted average costing method. The hammerhead motors are imported from Germany, and remember we're going to ignore that. The shipping terms stipulate that all items are shipped free on board, i.e. the control over the merchandise passed with the shipping of the merchandise. So when will Blue Bayou become the owner of the merchandise? When these goods are being put on the ship. So once it has been loaded on the ship, the ownership has passed to Blue Bayou. Insurance, which is a mandatory on the shipped merchandise, amounts to 3% of the invoice price and is payable by the customer. The non-refundable import duty, so it has to be capitalized, payable on these motors equals 10% of the invoice price. All of these motors are shipped to the Durban harbour. The company makes use of a single carrier company to deliver the merchandise to the plant in Johannesburg. Transport costs are fixed at 850 Rand per crate. There are 20 hammerhead motors in a crate. Very important, I'm going to do that in a different colour. The company makes provision for all costs to be incurred to take delivery of the merchandise when the order is shipped in Germany. Plastic pipes, now that was the hammerheads. Plastic pipes, that's the other one, are purchased from a local manufacturer. Let's just see there, hammerheads, that was all about that, plastic purchase. BBY, Blue Bayou, has also a showroom in the mall. In order to make the shop more appealing, they sell other swimming pool accessories as well. However, all of these accessories are consignment stock. Now guys, let me explain to you what consignment stock is. If you have some kind of item that you want to be sold, and let's say you're going to take it to a Pick n Pay, and Pick n Pay is not interested to buy your item, but you convince the store owner, we talk about the franchise stores, to give you some shelf space, and you said, well, it's your merchandise, all you want is some shelf space from Pick n Pay to put your goods on the shelf. So whenever that goods are being sold, you are going to get the proceeds from the sales. And obviously you have to pay the shop owner some kind of amount for his kindness to accommodate your goods on his shelves. But those stock is never been owned by the shop owner. You are remaining the lawful owner of that stock. So therefore, if there's any of that stock still on hand at the end of the year, it does not belong to Pick n Pay, it belongs to you. So in this case, all these other swimming pool accessories does not belong to Blue Bayou, it belongs to the guy who's actually received the opportunity to put his stock on their shelves. Now, what Blue Bayou get out of the deal is whenever one of those items is sold, they receive a commission of 30% on the items sold. So because Blue Bayou is not the rightful owner of the stock, Blue Bayou cannot add this stock to his closing inventory or opening inventory of any inventory. He can only recognize a commission of 30% in the income statement once some of those items have been sold. The following information relates to the month of March. Now, on the 10th of March, the company issued a goods received note for 4 crates of hammerhead motors, which was received from the Durban harbour. The total invoiced cost was 23,800. When the crates were unpacked, it was discovered that 3 hammerhead motors were damaged and it was immediately returned to the supplier in Germany. Acknowledgement was received from the supplier that a credit note will be issued for the invoice price of these items. The cost of sending the items back, it doesn't happen by itself, amounted to 550 Rand. It is the policy of the company to capitalize these type of expenses associated with the return of the merchandise as part of the cost price of the inventory item. So let's start with hammerheads. We say here, a bit later in the question, inventory records showed at 1 March, the opening inventory, that the stock on hand comprised of 16 hammerhead motors valued at 5,400 Rand. Good. 16 hammerhead at a value of 5,400 Rand. So if we're going to look at our hammerhead motors, clearly this question is all about units and prices and average prices. So therefore I'm going to answer this question in the stock sheet or the table format, units, rands and average price. I had an opening stock of 16 units, which was 5,400 Rand in total. So 5,400 divided by 16 gives me 338 Rand. We purchased 4 crates of hammerhead motors, and somewhere in the question they tell us that 1 crate has 20 hammerhead motors inside. So obviously we have bought 4 crates of hammerhead motors. So 4 times 20 equals 80, and the total invoice cost was 23,800 Rand. So 4 times 20 gives us 80 motors, and the total cost was 23,800 Rand. Good. Then I said that we had to return 3 of those motors, and I said, well, they will give us some credit for those 3 motors. So we're going to return 3 of them, and the total cost involved will be the 23,800 divided by 80 multiplied by 3, which gives us an amount of 893 Rand. Then I said the cost to return those items was 550 Rand. And they say that we have to capitalize these type of expenses with the cost price of the inventory item. So that is why we add it to the cost of those items that we've purchased. Now, there's also additional cost. We said insurance equals 3% of the invoice price. So insurance 3% of the invoice price. We cannot now deduct the invoice price because I've sent back some of the items. The insurer doesn't want to know about that. The insurer said all the time that those hammerheads were on sea. You were insured for a total of 80 hammerhead motors. Therefore, the insurance will be based on the invoice price of the 80 hammerhead motors. So that is why we do not deduct the 893. It is based on the original invoice price. The same thing applies to the import duty. They say the non-refundable import duty equals 10% of the invoice price. So the hammerheads that entered the borders of the country was all 80 of them. So therefore, the import duty will also be calculated on the value of the goods that entered into the country. So on the 23,800 times 10%, it will be 2380. The last cost that we have to take into consideration is the fixed cost of 850 Rand per crate. Now we have received 4 crates. The guy who's doing the transport doesn't know what is damaged and what's not damaged. He's not interested in that. So you're going to pay 4 crates times 850 Rand, a total of 3,400 Rand. So the total cost of that 77 items that was imported was then the 29,952. It means at this point of time I had 93 units available to sell, and the total cost associated with that equals 35,352. Good. Then we have bought some more hammerheads. On the 30th of March, hammerhead motors, which was already shipped in Germany, was still seaborne. Doesn't matter because we are already the owners. The expected date of arrival was 6 April. Doesn't matter, we're already the owners, because when this merchandise was shipped, the rewards and risks of ownership was transferred to Blue. The cost of the 2 crates of merchandise ordered according to the invoice was 11,660. 2 crates, there are 20 items in a crate, so in total there are 40 hammerheads that we have purchased. So 40 hammerheads that we've purchased, which gives us 11,660. Now the insurance again is going to be 3% of the invoice price, which gives us 350 Rand. The import duty again is going to be 10% of the invoice price, which gives us 1166. And there are 2 crates to be transported, so 850 times 2 gives us 1,700 Rand. So in total, those 40 hammerheads has costed us 14,876 Rand. At year end, how many hammerheads was available to be sold? 133 of them. What was the total cost for these 133 hammerheads? 50,227. That 5,400 plus the 29 plus the 14 equals 50,000. What then was the average cost per unit? 5227 divided by 133, which gives us 378 Rand per unit. Now the question tells us that at year end there was a physical stock count, and then there were 16 hammerhead motors. Now that was the opening inventory. Physical stock count on 31 March 2018 said that 25 hammerhead motors were still on hand at the end of the year. So going back to our calculation here, we said, well, there were 25 on hand at the end of the year. At what value? At the weighted average cost as at year end of 378 Rand per motor. So in total, our closing inventory for hammerheads was 9441. Good. Now the pipes. They've told us that plastic pipes during the month of March was as follows, but in this one they said at the beginning of March we had 39 pipes at an average cost of 44 Rand a pipe. So that was our opening inventory. Then we have purchased during the month of March 57 pipes. That 57 pipes has costed us a total invoice price of 2479. We also had to add to that delivery costs, so that will form part of the cost price of the units of an additional 200 Rand. So going back to our calculations for our pipes, we started off with our 39 pipes at an average price of 44 Rand. 39 times 44 gives us 1716. We had purchases of 2479 plus 200, which were 57 pipes in total, 2679. And then there was another purchase, a delivery of 55 pipes, and the total cost was 2420 with a delivery cost of 180 Rand. And that we have to capitalize as well. So 2420 plus 180 for those 55 pipes gives us a total of 2600 in total. Good. So at year end, we had in total 151 pipes available to sell or to use. The total cost of that 151 pipes was 6,995. So the weighted average cost per unit was 6,995 divided by 151, which gave us 46 Rand per unit. The question tells us that there was a physical stock count performed at year end, and according to that, there were 43 pipes on hand at year end. So at what value are we going to show that 43 pipes? We're going to show that 43 pipes at 46 Rand a pipe, so in total 1992. Number 8 here. For the stock tag, it was discovered that 13 of the 43 plastic pipes, so there we worked with the 43, 13 of them were completely damaged as a result of rat infestation. A business called Pescure was immediately contracted to eradicate the problem, and the cost amounted to 375 Rand. Now that's a normal operating cost, it's got nothing to do with those 13 pipes, so we're going to write off completely 13 of the 43 pipes. So our NRV adjustment is going to be 13 pipes at the weighted average cost as at year end of 46 Rand, which is 598 Rand. At what value are we going to show the plastic pipes in our books? At the 1992 less the 598, so we're going to show that at a total of 1394. Good. Now, we need a hammerhead motor. We need a plastic pipe. So, in the hammerhead motors, we saw that our closing inventory was 25. We had available to use 133. So, therefore, we have used 108 of the hammerhead motors. The question tells us to make one creepy crawler, we all have to use one. Let me just see where that is. The main components are one hammerhead motor and one customized plastic pipe to make one cleaning crawler. Good. So that means if we have used 108 hammerheads, it would have been to manufacture 108 of those cleaning crawlers. Here clearly we've seen that we had 151 pipes available to use. Our closing inventory was 43 pipes. So the difference between that means that we have issued 108 of these pipes. A cleaning crawler uses one pipe. So again, it comes back that we have made 108 of these cleaning crawlers during the course of the year. They've told us here that at the beginning of the day, we had in total 12 cleaning crawlers at a value of 4920 on hand. So that was our opening stock for finished goods for our cleaning crawler itself. So our opening inventory, 12 of them at 4920 in total, gives us an average price of 410 Rand per unit. We have manufactured, like we've seen here, 108 of these units during the year. And the cost of the hammerhead motors to manufacture the 108 was 40,786. 108 multiplied by the weighted average cost per unit as at year end, 40,786. It also used one pipe, and 108 pipes at 46 Rand, the weighted average cost at the end of the year was 5,003. So in total, that 108 motors costed the 40,786 as well as the 5,003. So in total, how many creepy crawlers did they have available to sell? They had available to sell 120 of these creepy crawlers. The total of those was 50,709, which gave us an average price 5709 divided by 120, 423 Rand per creepy crawler. Good. At the end of the year, how many of these items were still on hand? They've told us in the question at the end of the year, there were still 18 of these items on hand. So going back here, we had 120 of them available to sell. 18 was still on hand, so that means 102 of them was sold during the year. What is the value of the closing inventory? There were 18 on hand. The last weighted average cost was 423 Rand per unit. So 18 times 423 gives us a total of 7606. The question wants us to present the inventory note. So therefore, I'm interested in the closing inventory stock. Just to make a final comment on the swimming pool accessories. Remember, the swimming pool accessories, they told us at year end 4950 was actually on hand. But they also told us during in the question that this was all consignment stock. And because it was consignment stock, it doesn't belong to Blue Bayou, and therefore that will not be shown as part of my inventory note. So going back to inventory note, here it is consignment stock, no ownership, no value. Blue Bayou notes for the year ended 31 March, inventory, raw material. Now the hammerhead motors and the pipes are being shown as raw material. Going back to the hammerheads, here we've worked out our closing inventory, and the total for that was 9441. For the plastic pipes, the amount that we're going to show in our statement of financial position will be this amount of 1394 after the write-off of the net realizable value adjustment, so 1394. In total, our raw materials would have been 10,835. Our finished goods, that is now the creepy crawlers that's lying there, will be this 18 of them, and the total value there, 7606. So in total, our inventory at year end, 18442. There was a net realizable value adjustment, so we have to mention that. A net realizable value adjustment of 598 Rand, there we've calculated, was made on damaged plastic pipes written off. And you can say there, as a result of rat infestation. Maybe you shouldn't say that. Just say it was damaged. And that's the end of the story.